The world does not end with a bang. In the era of hybrid warfare, the collapse begins with silence. It is the silence of multi-billion-dollar assembly lines grinding to a sudden halt. It is the silence on the radar screen when guidance systems lack a critical core component. And it is the chilling silence in the war rooms of the Pentagon and Brussels, where the architects of global power realize that the aorta of the Western economy and military machine is held in the grip of a single rival. Rewind to August 2023, a terse announcement from China's Ministry of Commerce, no fanfare, no military parades, sent a seismic shockwave through the London Metal Exchange and the corridors of Washington. Beijing declared export controls on gallium and germanium. To the uninitiated, these are obscure elements on the periodic table. To the masters of the military-industrial complex, they are the blood flowing through the veins of every piece of modern hardware, from the smartphone in your pocket to the active electronically scanned array radars on fifth-generation fighter jets. This was not a random administrative glitch. This was the opening move in a game of Go calculated decades in advance. While the West intoxicated itself with the virtual growth of financial derivatives, with the explosion of service economies and sovereign debt, China was quietly conquering the periodic table. They understood a fundamental truth that Wall Street ignored. You cannot print raw materials. Consider the calculus of hard power. An F-35 Lightning II, the trillion-dollar avatar of American air superiority, requires approximately 417 kilograms of rare earth materials to fly and fight. From the thermal-resistant magnets in its jet turbines to the electro-optical targeting systems, the entire platform relies on a supply chain where China controls over 90% of global refining capacity. If Beijing truly turns off the tap, the F-35 ceases to be the apex predator of the skies. It becomes the world's most expensive paperweight, grounded in a hangar, defeated not by a surface-to-air missile, but by a chokehold on the supply chain. The West's fatal flaw was the assumption that the free market would solve all scarcities. The belief was that if prices rose, supply would magically appear. But geopolitics does not adhere to the supply and demand curves of an Economics 101 textbook. This is the rare earth trap. It is not merely a resource issue. It is a strategic weapon designed to neutralize military deterrents and strangle technological innovation without firing a single shot. While the Federal Reserve struggles to calibrate interest rates to tame inflation, and Wall Street investors obsess over the fluctuations of 10-year Treasury yields, a different storm is brewing upstream of every value chain. This disruption threatens more than just the profit margins of Apple or Tesla. It strikes at the foundation of the petrodollar itself. A reserve currency is only as strong as the physical goods it can purchase. If the US dollar cannot buy the strategic components necessary for national defense because of a geopolitical blockade, its utility faces an existential crisis. We are standing on the precipice of a reordered world. Power is no longer measured solely by nuclear warheads or the tonnage of aircraft carriers, but by the control of trace elements. A decision made in a mine in Inner Mongolia can trigger acute paralysis in Silicon Valley and the defense sectors of NATO. And this is merely the prologue. What we see on the surface, trade wars, chip sanctions, tariffs, is just the visible tip of the iceberg. Beneath the water, a violent undercurrent is eroding the bedrock of global stability. Nations are being forced to pick sides, and individual investors, holding tech stocks or government bonds, are exposed to a risk that no algorithm has priced in. Liquidity means nothing when the physical asset simply does not exist. Welcome to the most ruthless chessboard of the 21st century. Here, rare earths are not just dirt, they are the ultimate leverage.
To understand the lethality of this trap, one must strip away the sanitized marketing of the Green Revolution. For the past 2 decades, Western governments and ESG, environmental, social, and governance, investors have been selling a utopian vision, a transition to a carbon-neutral future powered by electric vehicles and wind turbines. But they conveniently omitted the dirty footnote of this transition. The road to a green future is paved with rare earth metals, and the toll booth is operated by the Chinese Communist Party. In 1992, Deng Xiaoping, the architect of modern China, uttered a sentence that became doctrine. The Middle East has oil, China has rare earths. While Western corporations were obsessed with quarterly earnings and outsourcing pollution, Beijing was playing a game of strategic accumulation, They deliberately lowered environmental regulations and subsidized state-owned enterprises to undercut global prices, driving competitors like the original Mountain Pass mine in California into bankruptcy. The hidden financial agenda is the weaponization of the climate transition. Consider the permanent magnet synchronous motor, the heart of a Tesla or a wind turbine. These rely on neodymium in dysprosium. By controlling these inputs, China controls the inflation rate of the green transition. They can squeeze the profit margins of Western automakers at will, while supplying their own champions, like BYD, at cost. The West sees climate change as the enemy. China sees the solution to climate change as the vector for global dominance.
History rhymes with terrifying precision. To understand the potential devastation, we must look at the oil shock of 1973. When OPEC proclaimed an embargo, the price of oil quadrupled, and the global economy went into cardiac arrest. Inflation skyrocketed, and stock markets crashed. Today, we face a techno-resource shock. But unlike oil, which can be sourced from multiple nations, heavy rare earths are a high-precision dependency dominated by one nation. We saw a dress rehearsal in 2010. Following a dispute near the Senkaku Islands, Beijing quietly halted rare earth exports to China. The price of dysprosium skyrocketed from $250 to over $2,000 per kilogram in months. This was a Sputnik moment that the West ignored. Instead of building resilient domestic supply chains, a process taking 15 years and billions in capex, Western tech giants simply moved manufacturing to China to bypass the quotas. They solved the short-term financial pain by increasing their long-term strategic vulnerability. If a similar embargo were enacted today over Taiwan, it would not just be a price spike, it would be a supply freeze. You can print dollars to buy oil, but you cannot print lanthanum. The grand strategy is fought in the midstream. The public assumes that if the U.S. has rare earth deposits, which it does, it is secure. This is a fatal misconception. Mining is just digging up dirt. The real chokehold is processing. Separating rare earth elements requires a nightmare of hydrology and toxicology. China controls roughly 85% of global processing capacity and 90% of high-strength magnet production. Even if the U.S. ramps up mining in Wyoming tomorrow, the ore must currently be shipped to China for refining. This is the refining gap. The Pentagon is effectively in a position where it must ask Beijing for permission to build the weapons designed to deter Beijing. Europe is even weaker, entirely reliant on trade diplomacy. This creates a terrifying incentive structure. If China believes the West cannot endure a 2-year supply chain winter, the economic deterrent against an invasion of Taiwan evaporates. The butterfly effect on financial markets would be catastrophic. We are not just talking about commodity futures. We're talking about the structural integrity of the S&P 500. Tech giants, Apple, NVIDIA, Microsoft, derive their valuations from hardware sales and server growth. All require rare earths. If China tightens the screw, the cost of goods sold, or COGS, explodes. Margins collapse. But the real carnage is in the bond market. The U.S. dollar relies on the demand for U.S. assets. If U.S. manufacturing is paralyzed, foreign capital flees. We could see a sell-off in U.S. treasuries, driving yields up. A spike in the 10-year Treasury yield acts like a wrecking ball through the housing market and the banking sector. The liquidity crisis would be immediate. Furthermore, a supply shock creates stagflation, stagnant growth with high inflation, which renders the traditional 60-40 investment portfolio useless. The Federal Reserve would be trapped. Raising rates to fight resource-driven inflation would crush an economy already starving for materials.
While Wall Street panics, the collateral damage destroys the global South. This is the 21st century scramble for Africa, waged not with gunboats, but with sovereign debt. Look at the Democratic Republic of the Congo, DRC, the source of 70% of the world's cobalt. Chinese state-backed entities now own the majority of industrial copper-cobalt mines there. This is debt-trap diplomacy. Beijing trades infrastructure for mineral rights. When emerging nations default on loans, the collateral seized is the mineral wealth. The suffering of smaller nations lubricates this machine. When the Fed raises rates, emerging market currencies crash and their debt servicing costs explode. To pay it back, they must dig faster and sell cheaper to the highest bidder, China. This is the resource curse 2.0. A coup in Guinea or unrest in Myanmar sends shockwaves through the portfolio of a retiree in Florida, as the butterfly effect connects a warlord in the jungle to the price of an EV battery in Chicago. The most chilling aspect is the kill chain. Modern warfare relies on precision. A missile's guidance system, its fin actuators, its laser rangefinders, all depend on samarium cobalt magnets, which do not demagnetize at high temperatures, Mach 5+. The Pentagon faces supply chain insecurity bordering on negligence. In 2022, F-35 deliveries were halted because a magnet was found to be sourced from China. A waiver was issued because there was no alternative. The U.S. military machine is a Ferrari engine running on a fuel line the adversary can crimp at will. In a high-intensity conflict, stockpiles deplete in weeks. We saw this in Ukraine with simple artillery. In a naval war over Taiwan, the burn rate of precision munitions would be astronomical. If China cuts the supply of replacement parts, the U.S. Navy doesn't need to be sunk, it just needs to wait for maintenance cycles to ground the fleet.
The nexus of the crisis is Taiwan. We focus on TSMC and semiconductors, but chips are useless without rare earths to interface with the physical world. A blockade of Taiwan would sever the link between the brain, chips, and the muscle, magnets. This scenario triggers the great bifurcation. The world splits into two technological stacks, the blue stack, West, and the red stack, China, Russia, and Global South. In the red stack, technology is cheap and resource abundant. In the blue stack, without cheap inputs, the green transition stalls and tech becomes a luxury. For the investor, globalized efficiency is replaced by geopolitical resilience. Companies like Apple or Tesla lose the efficiency of a single global supply chain, forcing them to duplicate factories. Profit margins contract structurally. The peace dividend that fueled the last 40 years of market growth is dead. Future scenarios demand a survival mindset. We are entering an era of structural inflation and geopolitical alpha. Investments will shift from asset-light, software, services, to hard assets, mines, refineries, agriculture, energy. The winners will be vertically integrated companies that own their supply chains from the mine to the showroom. The zombie companies that rely on cheap debt and just-in-time inventory will face extinction. We may see the rise of a commodity yuan, where China demands payment for rare earths in its own currency, bypassing the petrodollar and weakening U.S. financial hegemony. The U.S. Treasury market could face a fiscal trap, where yields must remain permanently higher to attract buyers in a bifurcated world. The world does not end with a bang, but with a shipping manifest marked "canceled." We are standing on the precipice of a new order. The era of the open ocean and the open market is closing. The periodic table has been weaponized. The rare earth trap is not just about magnets or batteries. It is about the fundamental physical capacity to act as a sovereign nation. As the screen fades to black, ask yourself, the device you are watching this on, the car in your driveway, the assets in your pension fund, who actually owns the ground they stand on? In the game of great powers, if you cannot dig it, you do not own it.